Welcome to TheoTrade. This is Don Kaufman. April 5th, 2021 minutes to go to the cash close here on this Monday afternoon with the spoos running to the upside. I mean, look, the S&Ps are at an all-time high. But then again, so is much of the bullish hubris inside of today's marketplace. So we come out of the holiday weekend. Obviously on Friday morning, the cash markets, equity markets are effectively closed. However, we got the jobs number, and there's some follow through, of course, to the upside following that jobs number. And again, the S&Ps right now are up almost 60 handles. But people, this is all about the Nasdaq leading us. Before we get there, one really unusual aspect, something that we just haven't seen in a considerable period of time, okay, was the fact that we saw incredibly high degrees of correlation at the cash open. This is something that I mentioned kind of incessantly on these kind of afternoon updates. I talk about this constantly, in the morning at the cash open. But what matters a tremendous amount, whether you look at the S&P 100, whether you look at the S&P 500, neither here or there, but the correlation, okay, is incredibly high. Now, here we are, and again, just a few minutes to go to the cash close, and maybe some of that correlated state kind of wore off, but we opened today with over 90 products on one side of the tape in the S&P 100, which is critically important because at that point, we're no longer playing this almost like comical rotation game in the marketplace. Now, kind of laced in there, when you're starting to talk about high correlation coefficients, effectively what we're saying now is the futures are largely in charge of this marketplace. Now, granted, there is still, okay, some room for discussion that correlation isn't necessarily there. And I say that because, well, the Russell is only up about 0.5%. The S&Ps are up, 1.5%, and the Nasdaq is just skyrocketing now, up a full 2%. So there still feels like there is some kind of rotation in play, not to mention the fact that the energy sector is kind of getting decimated, and those are your stocks that are effectively down today. But again, in a broader sense, okay, something has effectively changed in this marketplace because, again, one very curious thing. Well, today you actually have the financials higher, not by that much. Again, 0.8%. So they are by far kind of lagging the S&Ps. And of course, we have the monsters of tech breaking out to the upside today. In fact, this is an all-time high in our monster of tech symbol. If you're unaware, that is actually a combined ratio of Apple, Amazon, Facebook, Google, Microsoft, and the leader of the pack there we'll discuss here momentarily is none other than Google. So again, we opened in a correlated state, right? Something has definitively changed. And as I said, that can be taken both as good as or bad, because at that point, the S&Ps, the Nasdaq are going to be largely in charge. Like when you start to get into correlated states, no one cares what you think about an individual stock. At that point, it's all about larger movements in the broader marketplace. And for the first time, well, in a long time, we have very much definitively popped to the upside and outside of our volatility box. And this is something, again, we've discussed kind of incessantly here at TheoTrade. This is, of course, where we were last week. This is, again, it's definitive break to the upside, which is going to provide some opportunities as this week progresses, in effect, to be able to sell some premium out there to the upside. Again, we'll look at that throughout the course of this week. All right, back to it. So today's rally, well, brought to you by the Nasdaq. And the Nasdaq, if you take a look, all right, on fire the last 3 trading sessions. But there is one little cautious tail in here. There's no volume. There's no volume inside of the Nasdaq. A couple of these moves, right? There is just absolutely no volume necessarily in the S&Ps, but that doesn't necessarily matter. Listen, the price action's happening, right? We're trading at 40.70. Let's not, again, doubt the fact that we are effectively rallying. We're just doing it on very, very small size. I mean, the S&Ps today are lucky to crest just over a million contracts here coming into the cash close. Okay, another aspect that really resonated with me in today's trading session Bonds completely out of the picture. But that is in very large part due to the fact that on this Monday, following, the 3-day weekend, and following, of course, Easter, there are many, equity markets around the world that are closed. So the bonds, what did they do today? Absolutely nothing. And this is why, again, it kind of call into questions. Oh, there's low volume inside of the S&Ps, whatever. Yeah, but we started to hit correlation. And it took the bonds being out of the picture to effectively do that. Inside the next 2 days, these bonds could come rocking back to life and change the way you feel about these S&Ps in a very, very large sense. Now, to continue with that kind of thought, another area that really grabbed my attention, and something, again, I talk about incessantly on the weekend updates, expected move. This trading session is brought to you by, it's all about expected move. All we did throughout the course of today's trading session, and again, I'm going to open up a scratch pad. This scratch pad is what I use on the weekend update. And I was talking about over the weekend, traders are aggressively ignoring risk. Scroll to the very bottom. Look at the expected move. Highlight it for a second. Basically $58. Where are we right now? I mean, you can't make this stuff up. There's 1 minute left to play in the period. The expected move is 57.96. Oh, I'm sorry. We're 57 and change right now. People, this isn't the first time we've pointed this out. The entire trading session was all about us just skirting the upper edge of the expected move. So the SPX just drives up, basically, we'll call it 58 or $60, sits there and actually just channels around it throughout the entire trading session. There's your trading session. However, I do want to show you in a much larger sense, it's not just the expected move from the SPX that maybe we should be paying attention to. What else could we take a look at? I want to go cruise over to the QQQ, the Nasdaq. Pull up auto expected moves. Auto expected move actually solves expected move for you. And in this particular case, we're on it, on the upper edge of the expected move. Let's go look at Microsoft. Microsoft, hop, skip, and a jump, just outside the expected move. And I got to tell you, that is just the last, few minutes of trade. We spurted back to the upside here. Moments ago, we were sitting literally on the edge of the expected move. But what I'm trying to show you here, it's not just one or two products. Go take a look at for something like Apple. Apple, upper edge of the expected move. There's the closing bell. Take a quick glance at Facebook on the upper edge of the expected move. Now, give me the odd product out. You want to go to Tesla? Because Tesla really led the pack pretty much on the edge of the expected move. And Tesla was interesting because Tesla faded a little bit on the trading session. And again, if you take a look at the expected move, it actually dropped and faded inside of it. So where's the odd stock out? You're looking at this, you're like, it's a blistering rally. And that's why I said kind of that, the bullish hubris, if you will, is at all-time highs. People, let's get down to business here. This marketplace did nothing unexpected. You want to see a stock that broke the expected move? Here you go. It's Google. And Google is something I've actually talked about also incessantly for being in this incredibly tight channel. And then when it did break, it was going to break big, right? And here we are. It did, in fact, break the upper edge of the expected move. Another one, Walmart. Walmart, though, this one actually pulled back towards the close. So we're going to get some great opportunities based on some of these expected moves. Again, as the week kind of progresses, I'm not here to tell you, and again, I love this with the expected move, literally the SPX, 57.91. What was the expected move for the week? 57.96. So we're on it. And you're like, well, what's the advantage of knowing that? I'm not telling you that we can't smash outside this expected move. But I am telling you that if we do so, it could provide some really wicked kind of contrarian setups for the latter portion of the week. That could be in the SPX, it could be in Apple, it could be in Microsoft. Again, we could look for some intraday trades on this. We can look for some trades to the end of the week, but that is going to be one of the key setups. All right, last thing I want to mention on this evening's video here. Well, again, bonds do nothing, but volatility, very curious. So the VIX, a little tiny bid under the VIX. That didn't necessarily do it for me. But the S&Ps are up almost 1.5%. the volatility futures didn't really come down much. I also noticed, okay, even the short-term volatility, this is like a 9-day VIX, that bid up by 20%. What gives? All the other volatility products are massively unchanged on the trading session. So there is, again, this bullish hubris that hits the marketplace, but yet a hint of risk also comes into the marketplace. We're sitting right on the upper edge of, again, expected moves. If you get a big bid under this marketplace this evening, again, you may get some opportunities in very early trade tomorrow. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.